So now we're going to look at a low time frame reversal trade on Euro USD. So as we know on the low time frame trades, we want to start off on the hourly and build an idea of what the market is doing. This is not an Asia sweep trade, this is just a standard intraday trade that you can take throughout London and New York session. So building our picture for the market then, we are back here looking at this hourly range. We know we have the high of the range all the way up here. We have the low of the range down here in this bottom. What we've seen is a very sideways, choppy market phase, but this wick here came down and traded into this demand zone, which we can see just here. An imbalanced demand zone that had to be retested. So price came in, hit the midpoint of this demand zone, and then there was a large impulse up. We had a higher high, higher low, higher high, higher low, higher high, higher low, and then we've had a rollover and a pullback. When we were forming this bullish structure, we pushed through quite a few structure points, including this one here, and also this one here. So we made a higher high at this point, and when we started pulling back, I actually saw this as a little bit of a imbalance fill. Now, if we go to some lower time frames, you'll see we had plenty imbalance here to actually fill on the way down. Looking at this 15-minute demand area, we can see that price came into that, retested, and then started to make a run away. So at this point, I do have a little bit of a bullish bias and would expect the market is potentially likely to run to the upside. We've seen a minuscule structure point here, broken through with this higher high. Then price capped around this point, and then we pulled down towards this 15-minute area here, where we formed a retest and then started moving back to the upside. So coming out of this next Asia session, we actually did form a lower high. We are now trading within this range. So if we mark out the range, we have this kind of high and this kind of low. And now we can consider what's the price action doing within this. Well, we know here that we had a demand zone retest. So potentially we could either obviously sell through, or we could potentially shift into a reversal mode and make a push to the upside from here. Now we can scale low into the price action and have a look what's actually happening here to work out if there's any high interest demand points that we would like to see the market shift from. So if we run price back to this point, for example, and then we scale down to the 1 minute time frame, what we can do here is find refined areas. So we have the basis for the trade, and we now know there's a potential that the market could make a run to the upside from here if we react and reverse from a low time frame zone. Alternatively, we will push through, and then we can actually look towards the short side to continue the ride down on Euro USD. So here we have two very clear zones. We have this one, which has not yet been retested. We had a very small tap on the outside of the range, but as we know, we do like to see price to come into the range. That gives us more confidence on the setups. Now, it doesn't always have to hit the midpoint, but when we come into the range, that is shown as a full retest. Whereas this really, if we draw it on pinpoint, is not really a full significant retest and not something that I'm too interested in trusting yet. So we have these two zones of interest. We could also potentially look at this area. And then if we scale forward to price, we'll see how price is actually doing. And just coming out of the end of Asia session, we see here that the market has pulled down into this level. We had one retest, a push above, a slight sweep of liquidity here. Now we've had a secondary pull down into this zone. And what we could anticipate is that we may potentially reverse from this point. And if we do, we can start to buy into some bullish structure. We've now pushed through this zone, so this one is invalidated or not of interest to us. Or we could potentially continue trending down, then hit this point and start a reversal from there. So I'm going to clear this one off the chart, and then we'll just leave the price action and watch it and see what it's doing. Now, what is also important to note is this is actually a run of the Asia liquidity, as we see here. So that is a very good sign to see as well, to add confidence and confluence to the position. Now, at this point, we've actually had a substructure break, right? We've had lower low, lower high, lower low, lower high, lower low, lower high, higher low, and now we've broken through and formed a higher high. So the first position, an aggressive position, could be taken from this point here. Now, this is an aggressive position. We prefer to actually see the trend come into flow with some of the higher time frame structure. For example, if we push through these points and these points, we would have much more confidence. But as a general idea for an aggressive position, you could definitely look for a buy from this area here. So just seeing if that gets tagged in, we do indeed get a tag in and the market did start to run. But what this run has done, even if you didn't execute a position here, because I'll remind you again, this is a very aggressive trade, we have pushed through a few new structure points. And we can see here that if we pull this over to the side, we mark on this area here, we have, okay, higher high, higher low, equal high, then we form this demand, then we have a breakout. And this demand zone here is the zone that's caused this break of structure and potentially now also pushing through this structure as well, as we can see. So this is a more conservative approach. We can use the zone that broke structure, being this area here, to execute a trade when price comes into that region with a stop beneath the low, and then we can run price up. So if we put an order on here, this is a more confirmed opportunity and a little bit further in the trend. So this is a safer one to roll with than that original position we just looked at. And we could certainly look at this for an opportunity. Now we know we're bullish, but we only want to take this through the day's range. So what we could do is look towards this area up here in the highs, which looks like a nice little bit of a supply zone. So we have this supply area at the top, and this also correlates with the Asia high. So we could target just the low of the supply zone, and price is likely to then actually make a run towards the Asia high. So let's go with the aggressive position for example's sake and the more conservative position, and then we will see, are there going to be any scaling opportunities further in the trend. Now let's see, are we going to get tagged in and run on this one successfully? So there we have a tag in. Will the market then make a reversal? Get another slight tap in. We haven't broke structure yet, so we would not yet be break even on this position, which is good. We'd still be in this position, holding it out and waiting to see, are we going to get a nice run? And if we then break this structure point here, we will have the opportunity to go break even on this position. If not, we will take the loss on that. And there we go, we get the break above. Okay, so we've now had a break above on the more conservative position. We would now be risk-free on this one, risk-free on this one, and the stop for the original position would now be rolled to this point to lock in around 1R minimum. So now we've had another break of structure to the upside caused by this zone down here. So we can plot this area on. Now you could also use the gray area, the gray candle there that we have, which is the bearish candle. I'm just going to opt for this one because it is a larger area just to make sure we do get tagged in. And my stop loss will go beneath the low. Okay, so just using this candle for the entry with a stop loss beneath the recent low. This is a nice scaled position. The price action before is efficient if we consider that as well. So we should be able to get a nice run from here, just making sure we clear this low rather than putting it too tight to the zone, because that is going to risk a loss for us. So then if we target the highs up here, we can then see if the market's going to tag us in on a continuation trade now that we've reversed. And as we see, we came very close to the stop loss there, but we did not tag it. So you can see we came down and formed slightly equal lows. We did sweep the liquidity a little bit, but that is why we want to clear the lows, right? We cleared this low, we cleared just about this little candle here, and that is what kept us in the trade, but only just slightly. So you need to be aware of that, and you need to consider other areas when you are executing these positions. Now the market has started to make a run to the upside, and it is looking like a very profitable position is taking place. Now at this point, we'd be totally break even on this whole trade, and we could potentially even shift the stops up to this point to follow the structure. If we got a significant breakout of the structure here, we could then begin shifting, but we'd need to see some more momentum come in. So for now, our stops are going to be rolled to this point on all three positions. Still targeting that supply zone at the Asia high, remember, and the market has now broken out above this area. So we would now shift all of the stops for the position to here. That means we lock in a large profit regardless of whether the trade hits target or not. But as we see there, the target has now been fulfilled. The Asia high has been swept, and that is going to be 1, 2, 3 profitable positions scooped out there. Now, generally, you may only be going with the second two because this is an aggressive position, but it is still valid as I've showed you the breakdown from the start. So this is an 8.6R position. This is a 9.5R position. And this is a 8.2R position. So as crazy as it sounds, that right there, that simple layout and simple system you just saw, is a 26.3R profitable position from the low of the Asia range to the high. Now cutting this one off, you're losing 8.6R if you don't go with the aggressive position. So this then turns into around a 17R position. Now that could be 17%. It could also be around 9% if you went with 0.5% risk, which is generally what we do on the low time frames, especially when you're using funded accounts and you don't have too many bullets to risk before you get the account taken off you. So call this around 8% for a day, running from the Asia low to the Asia high on a standard continuation trade. Now this trade was not focused around the Asia liquidity runs, but it gives us a clear target, and it also adds confluence to the entry when we start to see the structure. Without an understanding of the Asia session liquidity runs, you could still have seen this trade very, very clearly in the market structure. We came into demand, we shifted a reversal, and then for the target, we clearly went for a imbalanced supply zone. So regardless of your understanding of the Asia session liquidity runs, we could definitely have caught this position regardless. And that is an 8% or 17% win, or potentially even a 26 or 13% win with the aggressive position. And that's a nice little example there of a low time frame reversal trade on euro. So it's a reversal because we're coming out of the downtrend and into the uptrend. Okay, this is the original reversal, and then these are essentially continuation scale-ins, but this is a confirmed reversal. This is an aggressive reversal, and then yes, this one is a confirmed scale-in as well. So that is my example for you. There's going to be more in the additional study area to come, but for now, let's have a look at a low time frame continuation trade.